It is a brand new day here at Pride FX. Welcome. My name is Montivino Valentine. I am the co-founder of the Pride FX movement. Now, if you have not subscribed, please do subscribe. Hit the like button as well as the notification bell so that you can receive future videos we do have on this channel. We are still basically doing FX G.O.A.T 2.0 market structure, and this course is teaching so many people the mistakes that they make in the market, especially on ranging markets. And so far we have only been speaking about ranging markets, but the information that you have been receiving is so powerful that a lot of people have said to me, this is so good. And yes, it is a very good course. I would rate it 10 out of 10. And so for you to actually have the best experience, you would need to watch our YouTube channel, as well as our you need to go onto our webpage, that is pride/fx.com, and you just basically have some type of PDF or an article that actually gives you the information you need to know. So it's like a beginner's course or a crasher course, just to take you through what you have learned in the past. Okay, so far we have learned in part 1 support and resistance in a ranging market. We've also learned support and resistance breakouts in a ranging market, and today we are speaking about the 15-minute time frame. Now, for the next few days, we're going to be speaking about different time frames that you can use this strategy on, and today we're just speaking about the 15-minute time frame. Now, in the article, I did state that there was a lot of people that classified the 15-minute time frame as market noise. And why they classify it as market noise is because it does not have a lot of structure for you to continuously look for trades. Remember, the bigger the time frames, the more they push the market into a different wave, right? If the higher time frames is in a downtrend, and you are expecting a buy on a 15-minute chart, the bigger time frames will have more effect on the smaller time frames, right? And so why are we speaking about the 15-minute time frame? FX G.O.A.T has spoken about this, and when I went through the course in this part, the 15-minute time frame is where they use it effectively only for news and fundamental trading, right? And so for fundamental trading, you would need to know what it is about. Fundamental trading is the results, or it is a speech that is given, or it is just a report on what is going on in a certain country. These reports are released every single month so that you notice that there are those events as well in currencies. Okay, they also help currencies build up to be much less or to be much higher, right? And this will help you if you want to make some dollars during the week and you want to scalp into the market. These events really help you with the 15-minute time frame. Okay, so this is where they're using the 15-minute time frame effectively. That's fundamental trading. So these events actually takes place every single month of the month, and in a year you have so many events that you can trade, and you can also learn a lot from these events when you are trading them. So what we're going to do is basically just go over to what I use, and basically these events are on a calendar, right? On economic calendar, so that you know when these events would take place. Now, I use Forex Factory. A lot of other people use investing.com, and the reason why I like Forex Factory is that if an event is not powerful anymore, they do update their system, right? With investing.com, if that event is still one of the lucrative ones, they're still going to classify it as volatile, right? And so your page won't look like this. So you'd need to go onto our website. It's pride/fx.com. Just go over to the website, check it out. Look at part 3 of the strategy. If you haven't watched part 1, watch part 1, watch part 2, and then come to part 3. Because if you are watching this video as well, make sure that you start from part 1 and move your way up, because you're going to be confused when we are going through this. Okay, so what we're looking at over here is an economic calendar, right? An economic calendar tells us the events that's going to take place, or events that has taken place before, right? And so you're going to get the dates. So this was Friday, September the 3rd. I wanted to make an example of what happened with NFP, okay? And then you're going to get the time, right? Now this time is related to where I am resided, which is in South Africa. So for you to change that, you need to go over once again to pride/fx.com. Look at part 3. It does show you how to change the time to where you are living. And also it's going to show you how to fix these filters just to see the highest volatile news on your calendar. Okay. And so the currency that we will be trading is USD, United States dollar. And they also tell you what events would take place in this, right? And you can see there's average hourly earnings, there's non-farm payroll, which is NFP, as well as unemployment rate in the United States, right? And then these are the details that they're giving you, and the actual what they actually wanted, this will not be given to you immediately, it will be given afterwards. Okay, so the actual number that has occurred for this event, you could see that that was 0.6%. The forecast that they were looking at was 0.3, and then previously what happened in the previous month was that the result was 0.4. Here we can see the same thing. The forecast was 720,000, and previously it did do well, and we can see that with this one is that it was much lower than the forecast as well as the previous. That's why the market sold on that day, right? As well as unemployment rate, we can see that the forecast was 5.2. We can see that previously it did 5.4%, and we can see that that actually stayed as the forecast. So the forecast is not always going to be right, okay? So they are just saying what they feel might happen, but it's not that we want to use that to our effect. We need to go and analyze the markets to get the best result. So let's dive straight into NFP. And so I'm using USD JPY for this. Okay, so all I'm going to do is delete that. And so we need to predict that. So it's not going to be that the forecast is telling you to sell, it's telling you to buy. It's just that we wanted to know what event would have taken place, because if you're looking at the forecast, like I said, it's not going to be as accurate as you would want it to be. So we're going to use what we have learned in part 1 as well as part 2 to our advantage, right? So far we have learned how to stay in a range, and we've also learned how the range would break out, how to break out of the range, or how to expect that there might be a breakout. Okay, so let's start from where we ended. So we said that when the market moves down, we know that there must be some point where the market would get exhausted, and we can see from this point the market went up. So that's an indication that this is a place where price is resting. It's looking for a resting place. Okay, and there we can see that the market is resting over there. And then over here we can see the same thing applies. The market went up to that point and came back down into this. So now we know for a fact that we are in a range, right? And so what we're going to do is just highlight that zone so that we can see what is happening. And so if I have to show you what's going on, we can see that this is in a range. We can see that the market is ranging in between these points, from support to resistance, and from resistance back to support, right? So now we know that that is a ranging market. So what is next, right? What is next is that obviously we are not focusing on what is going on. We want to know what would happen at the news, when the news is released, what will happen, and we want to be more precise when we are taking our entries for that event, right? We're not going to take the trade when the event starts. We're going to take it at least 2 minutes before the event takes off, right? And so here we have up, down, up, down, up, down, up, down. Now what I want you to take notice of as well is that they continuously went inner and inner, right? Because they are preparing for this event. Market makers, the banks, they are preparing for this event, right? And so they are giving signals to each other as well as to us that are retail traders that we will be doing something, or we're going to break the trend, or we're going to move up. It's always how you look at what pattern is playing out, right? And so here we can see that the market broke down to this point. So we're just going to highlight it for the next time. It's always going to be about the next time, okay? And so here we have highlighted that. And so what we're going to do is just drag over an order block, or as I would say, a support and resistance. And we can do that as well on top, okay? So we're just going to draw that over there, going to extend it. You can extend it for usage in future, but for now we want to be focusing on what the event is about to do, okay? And so now we are done with our analysis, but like I said to you, there was something they were doing in here, right? And you can see they started using this level as a support level, okay? So what we're going to do, we're going to highlight that as a support level, because we can see that price went there. You could have taken your exit, you went back down there, you took a buy, you took a sell, you took a buy, we went lower into that, and then we went up again, which was by actually there was news at that point. So that's why the market shot up drastically like that, and we can see there is a rejection over there. I will explain that to you with AUD soon. And then here we had a sell, right? And in this sell, if we're noticing something, is that there is higher lows occurring, right? We have spoken about higher lows yesterday. So all I want to do is just delete all these lines. They're looking a little bit confusing, and I don't want to lose you, right? So let's just delete these lines and let's get back to it. So I said there is another support there. We can draw that in as small as we can because I don't want to distract you. So here we have our new support structure. We can see that when price broke through it, and the reason why price broke through it, remember this is on a lower time frame, but we can see higher lows were occurring, right? Higher lows were occurring, and then there is another one, and that's why it broke through that support. That's mini support that we had over there. And then we can see it broke through, went back to our support, right? And then what happened from there is that price went over there, right? So we took a sell, and what do we start seeing unfold is higher lows again, right? There's one, there's another one, here is another one, and just before the event takes off, we broke through our support, and then they went to go and retest that support, went down, and when the event happened, we can see that price dropped down to this point, right? You can see that that is a sell, and then what happened? The market went back up. Why did the market go back up to that point? If we look carefully, we can see that that area was once a support area. So make sure that when you're analyzing, you're also looking for those key exit points, right? And so we can see that price came back down again, and what happened over there was a range, and then the range was taken out. We had a retest, and then the market continued playing up in that favor. Okay, so just small things to look at, right? So whenever you see the news is about to occur, make sure that you are looking for those higher. If it's making higher lows or higher highs, then you should know that there is going to be a breakout. But if the market is just ranging and it's just moving across, then you should know that it's going to do something different. Okay, so let's look at the next event that has occurred. It is AUD USD. So I'm going to use AUD USD, and this event occurred this morning at 6:30, right? My time zone, 6:30, and we can see that that is RBA rate statement. Okay, so let's go back to the event. And so I already done this because I had to do the blog. So what I'm going to do is just delete all the stuff and let's start from over. Okay, so we're looking for what? We're looking for exhaustion from this uptrend, right? This is the uptrend that we are talking about. That's the uptrend we are talking about. And we can see it starts reversing over there. So what is the thing that you need to do is draw it in so that you know that is a respected area, right? And so we can see from that point, the market came back down to this point. So whenever you do that, make sure that you're updating your charts so you know what is going on. Now, in this scenario, there's something that happened before the event even took off, right? We can see that the market, the range that it was supposed to play in was supposed to be the zone, but what it did well was stick to our support area. If you look closely, it is a range, but you can see that there is no, practically there is no movement, right? There is no movement happening over there. So you can see that when the market went to a buy and to a sell, we would have expected to take that buy, but what they were doing is preparing for the event that's going to take off, right? So what we're going to do is just highlight our zone. Going to highlight our zone, and on top we're going to highlight that zone, right? Just to give it more. And then let me just delete this. So we can see that in this zone is where the market should be playing, right? This is where the market should be playing. Now, what don't we see? What we're not seeing is that from this point that the market did not create any higher highs or higher lows, right? Can you see that they never created any of those, but they were trying to tell you something is going to happen, right? So we obviously know that something's going to happen, but we want to be correct. We want to be correct all the time, right? So let's just remove that line. And so let's look at this in more detail. So what we can do also here is extend this to there, right? So we know that the event is taking off at 6:30 in the morning, but we need to predict what will happen. So what you can do, or what I normally do, is that I will watch what is going on the 15 minutes prior. The 15 minutes prior to the event, I will be watching that candle closely. What is that candle? Where is that candle? And 3 minutes just before the event, I would take my judgment. And if it is for a buy or for a sell, I would take my trade in that 3 minutes, right? So here you can see that from here, we had that in our support area, right? So in our support area, no higher highs, no higher lows were created. So we definitely know that there is no breakout yet. So what you can do is take your buy trade, right? So you take your buy trade, and what happens? The market gets to your resistance. You exit the market, you leave the market, and you could have taken a sell. Why do I say so? Because there is no higher lows occurring. There's no update on what's happening over there. And so when you take that, you could have taken that sell, and you could have ended up driving the trend down, right? Could have driven the trend down. Now, you could have taken your first exit because the market did touch your exit over there, or you could have updated what is going on. There we have an exhaustion. That's why the market is over there. Here we have two places that the market is resting upon currently. So from there, it's going to go into this range. The event has occurred, so it's going to go into that range because we can see the power of what has happened before. Okay, so that is 15 minutes. We will be diving into the next time frame tomorrow. Hope you have a wonderful day. Do not forget to go and onto the blog. It's pride/fx.com and read the article, get more information behind it, and then continue practicing. If you are not practicing, you're not going to make any progress at all. Okay? Have a wonderful day. Have a wonderful week. See you tomorrow for part 4.